We're living in a weird world right now. What do you do with all this money that the government keeps throwing at us? Stimulus checks, stimmy checks keep coming at us. We get infrastructure bill news, 2.3 trillion with the T dollars. The government just keeps printing money. Cash is trash right now. Inflation is going to be coming towards the end of 2021, early 2022. We're going to see those inflation numbers start to creep up. That is bad for the stock market, right? Wrong. Not necessarily. Sure, some sectors are going to get absolutely demolished, while all this cash that's being printed is going to flood into other sectors, and that's what we're going to be talking about in today's video. What stocks are good deals today? Even though the stock market is trading at these unprecedented levels, all-time highs, there are still some really good deals out there for long-term buys, and that's what we're going to be breaking down today. Some stocks that are good deals today and are going to be even better deals tomorrow with this inflation. You know what else is a good deal? M1 Finance. It's the best long-term broker out there, and they're going to give you free money. So check out M1 Finance. If you sign up with the link in the description, they're going to throw some free money at you, and you also get access to their awesome platform and services. So check out the link in the description. Inflation is coming. That's what we're going to be talking about today, what inflation is, how it's going to affect the stock market, and what sectors, what specific stocks should we be putting this money in to avoid the inflation crash that everybody's talking about. So inflation, the year is 2021. You have $10. You go to the grocery store, and with that $10, you can get 2 gallons of milk. A year goes by, inflation is on the rise. You go to the same grocery store. Now it's 2022. You still have $10, but you can only get 1 gallon of milk. Why does inflation happen? Because the government continues to print money. They keep throwing stimmy checks at us. They're printing money for this bill that's all over the news and the media. That is why inflation happens. It weakens the US dollar. People say, investors say it's a bad thing, and sure, it is not good. Inflation's never good. But we can look at sectors that are going to benefit from inflation. We also need to be cognizant of hedge funds that have been using margin left and right. They've been loading the boat up over the last 12 months or so with margin, aka borrowing money, loaning money to invest in the stock market. This Discovery stock is a huge example of what can happen when these hedge funds start flooding the market trying to reduce some of their margin. A big hedge fund got a margin call. They owned Discovery stock, and this is what happened. Okay, so this was the hedge fund buying in, creating a squeeze, and it ran Discovery stock all the way up from less than $25 a share, up to almost $80 a share. Their broker said, wait a second, you are way too leveraged. You have way too much margin on your books. That's too much risk for us to take on. So we're going to liquidate you. We're going to sell all your stocks. And this is what happened. And Discovery stock crashed. Also, CBS Viacom crashed as well. And that was all due to margin. Nothing changed from a fundamental perspective. So I think we could see more of this start to happen as these big hedge funds start to realize that they're too leveraged. They have too much margin out there, and they need to scale it back as the market continues to go higher. The S&P 500, all-time highs. The NASDAQ has bounced back. The Dow Jones has bounced back. So what's next? Are these hedge funds going to flood the market and cause a crash? Well, maybe in some sectors, but there's some sectors that are going to benefit from this inflation, this money that's getting printed left and right. We have cash on deck. Everybody has cash because the government has been throwing it at us, and people are going to be investing it in the stock market. They're going to be looking for good deals, and what are the best deals out there? It's not the recovery stocks. Look at stocks like Delta Airlines, right? Delta Airlines is trading higher than it was pre-Rona. Look at this. Pre-Rona, we were trading at $57 or $60 a share, so we're not exactly trading higher than pre-Rona, but we should not be trading at this anywhere near the same levels as we were pre-Rona, yet we are. This is a weekly chart, and we are trading at the same levels as we were in 2019, 2018, even though Delta's numbers are much worse. Similar to, look at Boeing. Boeing is making a nice steady climb higher, and I'm not saying Boeing's not a good long-term investment, but it is up from $90 a share back to $275 since the Rona lows. And that is not the best deal. The best deals are the ones that have been getting crushed lately, and that is EV. EV has got slaughtered of late, but as investors look for places to put their money to avoid inflation, they are going to be looking at growth sectors such as EV and tech, which have been hurt the worst over the last month or so. Welcome to National Stockographic. We see XL stock hiding in this cave, hibernating. Over the last month, XL stock has been hibernating, but today it smelled some blueberries. Spring is coming, and XL stock woke up. XL stock is one of the most undervalued stocks in the entire market. It continues to crash. Why does it continue to crash? Because retail traders caused a squeeze. This was hype, this was FOMO, and up here, short sellers stepped in and they started to manipulate the market. What did they do? They said, this is weak hands. This is retail traders who aren't going to be able to withstand us if we come in, manipulate the market, and short this stock. That's exactly what they did. Everybody panicked out of their position, and this thing crashed. Today we got news that they got an order for 19 vehicles, and the stock was up 20% at the highs. But 19 vehicles isn't going to cut it. We can see the spike early in the morning, followed by a crash. 19 vehicles isn't changing anything. However, it's a good start, and I do think we're going to start to see more and more deals of this nature come into XL Fleet. It's a steal at $8.50 where it's at today, and I think this stock is trading at $25, $30 within the next 12 to 24 months. So if you're looking for a place to put your money to avoid inflation, XL stock is a good place in my opinion. Some investors aren't big on hybrid, and I'm the exact opposite. I think hybrid is going to be the bridge to get us to total EV. I've said it 1,000 times, and I will say it 1,000 more times. We are not ready for total EV in these big fleets, right? If you are a construction crew, do you want to go from diesel or gas to total EV right now? No way. The technology isn't there yet. The range, the power, the torque, the towing capacity, it's not there yet. But hybrid, it is there. So XL Fleet, I think, has an edge. And eventually they will need to transition to total EV, but hybrid is going to get us across that bridge. And USPS deal, the USPS contract is justification and backs that thesis up. Everybody thought the USPS deal was going to go to Workhorse and their total EV solution, and everybody was wrong. Why? Because total EV, it's not there yet. It will be maybe 5, 6, 7 years down the road, but not today. And companies like XL Fleet are going to benefit from this transition. Blink Charging. Blink Charging is another stock that I'm putting my money into to avoid inflation or combat inflation, because you can't avoid inflation. We can combat it and try to beat it. We can't avoid it, but we can beat it. We can outpace it. So Blink Charging, this is kind of an infrastructure deal, right? Infrastructure deal is going to cause inflation, but we can look and see where is that money going to, and we can be there before the money gets there, right? We can be waiting on that infrastructure money to come in and then ride the wave higher, beating the inflation. So Blink Charging, this is where the infrastructure deal was announced. All we got was about a 7 or 8% jump from the announcement. So I think there is a lot of room left to go, right? There's no way we should not be trading at all-time highs. We're going to have $175 billion going into this sector with more than 500,000 new EV charging stations coming out into the U.S. network because of this infrastructure bill. So there's no way Blink Charging should not be trading at all-time highs. We're trading at $40 right now. We have all-time highs of $64. I think over the next 3 to 5 months, And especially if the infrastructure bill gets passed, this thing is a $70 stock before the end of the year. And I know I keep talking about Blink charging. I'm sure you guys are tired of it, but I cannot emphasize enough that this is one of my highest conviction stocks right now. Palantir, the James Bond of the stock market, one of the highest tech, most innovative, disruptive companies to come into the market in a long time. It keeps dropping. It hasn't made that move that we've been looking for, but this is one of those stocks that will benefit as investors flood money into the stock market, and we're getting it at an unbelievable deal right now. This is one of those companies that is going to be growing over the next decade. We're going to see huge growth. They just landed a big $90 million contract with the government. A really big deal. Palantir jumped only 5 or 6% after announcing a $89 million order from the National Nuclear Security Administration. They keep getting government deals. The cybersecurity firm keeps getting government deals, and their average customer spend is huge. I think the average customer is spending around $10 million annually with Palantir. So you can imagine, it's a snowball effect. Every customer you add that's spending $10, $15 million annually with you on a reoccurring basis, it starts to build, it starts to snowball. And before you know it, they're going to be doing a few $billion annually in revenue, and this stock is just too cheap based on its expected and projected revenue growth over the next few years. Even though these deals keep getting announced, Palantir is still trading way off these all-time highs of $45 a share. 100% upside potential to those recent highs. I think investors are going to see the revenue growth coming in and flock to the stock. I'm going to be waiting. I'm already buying. I bought some last week. I'm looking to add on any more pullbacks. So we'll be continuing to watch this Palantir, as I think it's one of the best growth stocks to buy right now. Data is the new currency. These companies are spending tons of money to collect data on their customers. You may not like it. You may not want your data out there floating around and these companies to have your data, but it's happening, and they're going to do everything to protect it. Because if a company's data is breached, if there's a security breach and your data is stolen from these companies, you are less likely to want to do business with these companies, and that's what Palantir does. They help protect data from security breaches, and this industry is growing. Palantir is growing, and I believe it's a really good deal here at $22 per share. All right, guys, that's going to wrap up the video. If you got something from it, do me a solid and hit that like button for me. If you're new to the channel, consider subscribing. If you want to get some free money, check out M1 Finance, link in the description. If you want to come get my buy and sell orders in real time, that will be the first link in the description. I love you guys. Until next time, peace.